if you lose confidence in the currency, the banks, then you lose confidence in fiat currency as money. And therefore, the money is dying. It's obviously dying in Venezuela. It's obviously dying in Argentina. But it's dying everywhere in the world, even in the United States and in Western Europe. So when you lose confidence in the money, then you start thinking about commodity monies.
Bitcoin, BTC, continues to lose ground in the wake of CoinDesk's Bitcoin Trend Indicator, shedding the bullish bias for the first time in 3 weeks. The top cryptocurrency by market value fell to $26,160 before press time, reaching the lowest since March 17th, according to CoinDesk data. Prices have declined by over 12% since May 6th, decoupling from the uptick in traditional risk assets like Nasdaq. Hello and welcome to Money Talks. In today's video, Michael Saylor updates about Bitcoin's current market standing, the future of Bitcoin adoption in 2023.
If I can't trust the bank, if I can't move the money cross-border, and if the currency is losing value every year or every month, then I start thinking about commodity monies. And so the thing everybody's been talking about is, what are the commodity monies? Is it gold? Are we going to trade oil? Are we going to move timber, soybeans? Well, what are your choices? If you want to move $10 million in gold, that's 350 pounds. So when it comes time to actually trade $10 million of gold, it's going to cost you $250,000 in insurance and shipping fees to move 350 pounds of gold. If I wanted to move $10 million of oil, that's 125,000 barrels of oil. That's $400,000 to ship the oil from New York to London. Okay, that doesn't make any sense, not to mention the fact the average person doesn't have space for 125,000 barrels of oil. You want to move, property, $10 million of property is an apartment building. How do I move an apartment building from Africa to South America to North America? That's not happening at all, right? So what about a painting? Okay, well, a painting's pretty efficient, a $10 million painting. The problem is it's physical, it's fragile, it's non-fungible, which means that it might burn, it might get soaked, it might get lost, it might get stolen. But if it doesn't get any of those things and you want to trade it to the rich counterparty in London, you're paying anywhere from $500,000 to $2 million in auction fees just to trade $10 million of money in the form of a painting. So, what do we have left, right? I mean, securities, you can't move $10 million of stocks across a border because they're trapped by the counterparty. Holding $10 million of an ETF at 50 to 100 basis points a year is going to cost you $500,000 to $1 million to store your money in securities. So now you see, what's $10 million of Bitcoin? 300 Bitcoin. So I can have 300 Bitcoin on a hardware wallet. I could, in theory, just remember it with a 12-word seed phrase. I can move it cross-border anywhere in the world. By the way, compare it 300 Bitcoin as money versus a yacht. A $10 million yacht is 125 feet long, costs $2 million a year to maintain, and costs you $200,000 to move from America to Europe in about 4 weeks or 3 weeks. So you can see all the other forms of commodity money. They're not fast. They're expensive to maintain. They're physical, they're fragile, they're non-fungible, the fees are exorbitant. So if the world's struggling for a solution to commodity money, Bitcoin is the king commodity. It's better than every other physical commodity because it's digital.
The BTI indicator, which measures the directional momentum and strength in Bitcoin's price, flipped from bullish to neutral on Thursday. The indicator consistently signaled an uptrend since January 13th, barring the brief red flash, downtrend signal in mid-March, and the neutral reading on April 24th. There seems to be paper-thin liquidity right now, even across majors such as BTC. While we can't point at a direct reason for the weakness, any medium to large offers are driving the market down, Dib said. Liquidity or market depth has recently worsened on major exchanges, including Binance, making it difficult for traders to execute large orders without influencing prices. We could get an acceleration on the downside if U.S. equities also start to roll over, Lowe told CoinDesk. $25,200 is key support for BTC, followed by $23,100 on potential downside acceleration.
I can carry it in the palm of my hand. Try carrying 125,000 barrels of oil in the palm of your hand. Better than that. And it's also better than every other commodity because it's scarce. It's a scarcity. If the price of oil goes up by a factor of 10, if the price of gold goes up by a factor of 10, if the price of anything goes up by a factor of 10, people, the collective intelligence of 8 billion people will produce more of it. But Bitcoin is the one thing you can't produce more of. So Bitcoin's the apex money because it's scarcity and it's digital. And of course, it's the dominant crypto network in the world. It's the one that everybody trusts. It's the one that's truly decentralized. It's the one that's acknowledged as an asset without an issuer. So I think the meltdown of the banks and the meltdown of currencies is driving a stampede of smart money to Bitcoin.
On the macro, meanwhile, encouraging U.S. Producer Price Index, PPI, and unemployment data gave crypto investors cause for cautious celebration. Jobless claims were up, while PPI conformed to expectations of inflation continuing to trail off. Together with similar signals from the Consumer Price Index, CPI, the day prior, the odds were on for interest rates to stop rising in June. Financial commentator TED Talks Macro reacted. U.S. unemployment claims higher to plus 264K and PPI in line with consensus on the headline plus core prints. More data conducive to a pause in June. The latest readings from CME Group's FedWatch tool showed a market consensus for a June rate hike pause at over 96%.
Starting in August of 2020, if you track the performance of every major asset class, that over the next 2.5 to 3 years, and I tweeted this over the weekend, Bitcoin's up 147%. The S&P's up 23%, the Nasdaq's up 12%, gold's up 1%, silver is down 9%, bonds are down 16%. Okay, so why is that? Well, because Bitcoin is the apex property of the human race. It's without counterparty risk. You don't have all of the dilutive effects of running a company. You don't have people are creating more silver, they're issuing more bonds, they're creating more gold, right? You've got regulation, tariff risk, trade risk. There are a lot of reasons why the other assets don't perform as well. So let's say that I went back in time to the summer of 2020 and you actually knew what was going to happen for the next 3 years. If you had perfect predestination, you could see the future. In that case, the issue is, how do you outperform Bitcoin? So when MicroStrategy started, we bought $250 million of Bitcoin, and Bitcoin represented 25% of our market cap. What happened next is Bitcoin performed. If we had just stopped there, if we had stopped with that, then we would have actually probably outperformed the S&P. But if you actually look at MicroStrategy stock in that time period outperformed Bitcoin. We actually did more than 147%. So how am I going to actually keep up with, and by the way, I wasn't trying to outperform, I was just trying to keep up, or you might even say not lose. I was holding bonds. Right? All those banks that went bankrupt, they're bankrupt because they were holding the bonds and the bonds traded down. And I just didn't want to lose slowly or go poor slowly.
So what are your thoughts is the final bottom of Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.